Hey, what's up, guys? Houston here. Look, I don't know if you heard the news, but Chase just created a double-edged sword, okay? And so let me explain to you. Chase partnered up with Nova Bank, all right? And so what that means is that if you want to get a loan through Chase, they're going to use Nova Bank's platform, all right? So here's what it really means so that you understand. All right, so where you would submit your application and they would pull your FICO score and stuff like that, and you put down stated information, a guesstimate of what your revenues will be, that's no longer they're going to be doing that, okay? What they're going to be doing now is they're going to be focused on your actual revenue. Now, if you can't get qualified for a Chase business loan, I have other lenders I'm gonna share with you, so stick with me so I can clarify this. All right, so here's the deal. All right, so no more stated income. They're not focusing on the FICO score. All right, so no more making up information is basically what they're doing. If you have a business, the way that they're going to verify this is using either decision logic or plaid, okay, to verify, to help you qualify. And the reason they started doing this is because they stated that they see a lot of people in the market that may have bad credit. However, the business itself is generating good revenue. All right, so that's the reason, the whole purpose of them doing this, because they feel they're losing out on market shares to other non-FICO institutions that are qualifying people for loans and stuff like that. So they wanted to get a part of that market. All right, so basically no revenue-based lending is what they're doing. Okay, only revenue-based and no FICO score lending is what they're trying to do. All right, now that being said, some of the other lenders, if you can't qualify for a Chase loan, okay, or you had a Chase loan in the past and things didn't work out, there are other places that you can go to get a loan. All right, now the first one is Fair Figure, okay, and the reason that Fair Figure is important because they report to more business credit bureaus than even Chase. I always tell you, when you structure your business, you want to have three type of banks, okay? You want to have a major bank, and your major banks would be like Chase, Citibank, Capital One. Then you want to have a regional bank. So your regional banks would be like Truist, PNC, BMO, Regions Bank. Those would be your regional banks. All right, and then you want to have a credit union. So your credit unions would be like BCU. Now with BCU, they pull Advantage 3. You may use NASA. NASA uses Advantage 4. You may use Navy Federal. Navy Federal uses a FICO 9. Okay, so you want to have those three type of banks when you're registering your business, okay? And the reason is because, again, most of the time with those type of businesses, they're going off of the credit score, okay? So no revenue, all right? Now, like I said, with Chase, when it comes to the business loans, they're changing over. So where they're not going to be focused on the FICO score, they're going to be focused on the revenue in the business, all right? Now, going back to Fair Figure, as I mentioned, okay, so with Fair Figure, in order to get a loan from them with no PG, only your EIN number, you need to make a minimum of at least $2,500, all right? You have to be in business for at least 90 days in order to qualify. However, they do report to Experian Business. You have Equifax Business. You have Small Business Financial Exchange. So they report to multiple business credit bureaus, which is very important to you. Okay, this is very important to you, so you can have leverage. All right. Now, another one I've mentioned in the past is like Giggle Finance. So with Giggle Finance, here's the situation. You have to be in business at least 90 days. So you can be a Uber Eats, Lyft driver or something like that. Speaking of Uber Eats, I'm gonna come back to that because that's very important. So keep in mind about that, because I'm gonna come back to that. But with Giggle Finance, 90 days, you have to make a minimum of about $1,500 a month. You have to have deposits of at least 3 to 4 times a month, okay, in order to qualify with them. All right. Then you have Fundo. Okay. So with Fundo, they being a MCA, a merchant cash advance. All right. They give you up to $10,000. By the way, Giggle Finance gives you $5,000. In reference to Fair Figure, it just depends on the revenue. Like I said, a minimum revenue is at least $2,500. All right. So I just wanted to retract so you can understand that. But going back to Fundo, $10,000. 90 days in business, so you can be a handyman. You can even be a MLM. So you can be in an MLM and still get a loan through them. So that's the great part about Fundo, but it's a merchant cash advance, all right? So just keep that in mind. Now, they don't operate in California and New York, so that's something that you have to consider. Now, also in terms of minimum income requirements, business income requirement is at least $1,500. Now, do you have to have a registered business? No, you do not have to have a registered business. All right. So, however, I would tell you this: if you have a registered business and you have bad credit, you still have a higher opportunity to get more funding even with bad credit. Okay, so that's the reason why I tell you, you should structure a business. I don't care if you're doing side gigs, side hustles, or whatever. You should have a registered business. Main reason is because you'll be able to get access to capital even if you have bad credit. Okay, that's the number one thing. And also just for protection as well, and leverage. All right, so that's the reason we always tell you to reach out to us so we can set up your new company and stuff in the right NAICS code as well. That's very important. All right, so the next lender we're talking about is Lendesca. Now with Lendesca, they go up to $20,000. All right. Now their minimum credit score is a 550 credit score. Okay, so still you have bad credit, right? And the minimum income for them, they want you to have at least $25,000 annually. Okay, so that's a little over $2,000 they want you to have in order to qualify with them. I think it's $2,025 or $2,050 or something like that. I guess that's the reason they said don't do math on camera. However, they're very flexible. It is a platform. That's the thing about it with Lendesca. They are a platform where Fundo and Giggle Finance and Fair Figure, they are a direct lender. All right. Now, like I said, I mentioned to you guys about Uber Eats. All right. So Uber Eats has a new program, okay, that they're going to be launching. If you're in the restaurant industry, so if you have a food truck or restaurant, what they're going to be doing, they're also going to be giving you a loan with no credit check, no personal guarantee, no FICO score. They partnered up with this fintech company called Pipe, okay? And so with this here fintech company, all they're doing is verifying the revenue, just like with Chase doing with Nova, just to verify the revenue in the business. And then they will give you a loan off of the revenue. And this is basically, like I said, with Uber Eats, they're targeting restaurants that have bad credit. So if you're a food truck, yes. You know, if you have a catering business, more likely they still will work with you. If you're using Uber Eats to get out orders and stuff like this, then they may be able to help you. All right. So I wanted to bring this to your attention. That's the reason all the talk about Chase no longer using FICO scores. It's only for the loans. and the lines of credit. It has nothing to do with their business credit cards, okay? So I hope this video helps you. If you have any questions about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.